It's decision time for Bitcoin. Yesterday, we went all the way up to $104,000, only to come crashing down to $92,000 within minutes. Meanwhile, just minutes ago, Ethereum hit $4,000. In today's video, we'll be taking a look at where the market could be headed and how we should be navigating this volatility. Let's jump right into it. So as we can see here, Bitcoin went all the way up to $104,000, wicked back down to $92,000, and the correction was just in a matter of minutes. Now, usually when you see equally long wicks on both sides of the candle, it means that the market is a little bit uncertain about where it should be going next. But the positive sign is that on today's candle, so far, we look like we are closing another green candle. And if we are to zoom out, we are currently above the highest daily close for Bitcoin ever. Now we can see obviously that the previous one was a red daily close despite going all the way up here. But as soon as Bitcoin secures its move above $100,000 and closes there on the daily, on the weekly, and hopefully on the monthly, it will only confirm that there should be a ton more upside for the entire crypto market. Now, one of the reasons that today's candle is green is because the labor market data came out, and we can see that the unemployment rate here is exactly as expected at 4.2% in line with the consensus. Just a little piece of advice: whenever there is any kind of labor market data coming out or the Fed is speaking, the markets usually react to this in a very volatile way. And so what we saw yesterday was not just experiencing the heavy resistance around the 100,000 psychological level for Bitcoin, but it also just suggested that the market participants were de-risking ahead of today's announcement. Now again, 4.2%, nothing to be worried about, and so the market seems to be trending higher. Something else that is extremely bullish for Bitcoin at the moment is that we wicked down below this trend line and came right back up. Now this is why I always say it's important to zoom out, because we can see that on this trend line, Bitcoin looks as healthy as ever. So many people bought that dip and we came right back up to where we are today. And I do agree with this analysis. Despite the liquidation cascade, Bitcoin still looks very healthy. And something else to suggest that this volatility isn't something that we haven't seen before is the fact that every single time that Bitcoin hits these big milestones, there is a ton of volatility in both directions. We should fully be expecting this by now. We can see that when Bitcoin broke through the $1,000 milestone, we came crashing right back down to around $750, only to continue upwards throughout that bull market. Same thing at around the $10,000 mark. We wicked all the way up to $11,500 and came crashing right back down to $8,500. But notice how the candle was very small in this situation. And we can see that yesterday's candle was very small as well, with long wicks to both sides. Now, if we go back here, it's exactly as expected. We wicked above $100,000, came back down, and now it's looking like we are about to push ourselves much, much higher. One of my favorite analysts in the crypto space outlined what happened with the QQQ ETF, and it might look like Bitcoin is replicating this kind of pattern. So when the QQQ ETF launched, it was around 48, then 103, then it came back down to 95, then it went up to 120, and then the rest of this path is a little bit dubious with the fact that, it went back down to 60, 100, 20, 522, 25 years later. So this could be a hypothetical path for Bitcoin. Now, I know that we are seeing the most adoption ever for an asset with these spot ETFs for Bitcoin, but we went to 48 all the way up to 103. But that initial correction to $95,000 seemed to more or less happen. And now, does this mean we can expect that $120,000 is next for Bitcoin? If this were to happen, I feel like it would just confirm that we are indeed living in a simulation. But I wouldn't bet the bank on this. It's just a very interesting observation. A quick note on the liquidation event. Obviously, so many Bitcoin longs were liquidated, and so it's very important that you're cautious in this market. Then we also have the fact that the US Bitcoin spot ETFs now surpass Satoshi Nakamoto's holdings, which is a crazy thing to say considering that the ETFs only launched this year. Fear and greed index, we are still in a period of extreme greed, but as we know, when we are in a raging bull market, we can stay in extreme greed levels for a very, very long time. So Bitcoin saw a little bit of a healthy correction and came right back up. And now we are looking to test the $100,000 level once again. But the talk of the town is Ethereum, having surpassed $4,000 today, which is a huge milestone for Ethereum. Now, the previous all-time high is around 4.8K, and so we are only $800 away from breaking that level. One interesting observation that I made here is the fact that Ethereum breaking its all-time highs is often delayed compared to Bitcoin. As we know, Bitcoin leads the market, and Ethereum was never going to break its all-time high until Bitcoin did so. And now we are looking like we are on the path to breaking Ethereum's all-time high. So we can see here that the bottom graph represents the Bitcoin price action, and the upper one with the candles representing Ethereum's price action. Bitcoin broke its previous all-time high set in 2017 only in December of 2020. But if we go up to the Ethereum graph, we can see that Ethereum's all-time high back then was around $1,400. And around that time where Bitcoin broke its all-time high, Ethereum was nowhere close, still below $1,000. But then we move on into January, and that is when Ethereum finally broke its previous all-time high. So Ethereum breaking its all-time high lags a little bit behind Bitcoin. So what this means now is we can see on the chart that Bitcoin broke its previous all-time high this November, breaking the $73,000 barrier. And now Ethereum isn't quite there yet. Ethereum's previous all-time high, as we stated earlier, is around the 4.8K mark. And so it could suggest that Ethereum is playing a little bit of catch-up and will likely break its all-time high sometime in January. Now, to me, the data is very clear, and what backs this up is the fact that Bitcoin dominance is breaking out of this range to the downside. The longer we go at this pace, the more and more it's starting to look like altcoin season. And the more that Ethereum starts to pump, especially against its Bitcoin pair, which it's currently at 0.04, bouncing all the way up from 0.03, this tells me that Ethereum will likely continue to pump and encourages me to open a leveraged trade with Ethereum to make some nice gains. Now, if you're looking to trade Ethereum, you can do so by clicking the first link in my description by joining the Weeks platform. By clicking my link, you can earn up to $20,000 in withdrawable bonuses. I would highly recommend you sign up. Okay, so Ethereum is looking primed for a move to the upside. We can see, however, that this area can pose as a little bit of resistance, the 4.1K mark. As we can see on this chart here, we were rejected twice already around this level, but this time around it does look like we have enough fuel to push us higher. Now, what we really want here is for the government to start printing money, because to me that would certainly move Ethereum higher. To me, that is the only current uncertainty to decide whether or not this altcoin market will really pick up and explode as we're expecting it to. But as I always say, the charts don't lie. This is a very aggressive downside move by Bitcoin dominance, and this should be fueling altcoins. Now, what I'm really hoping for outside of the money printing is for Bitcoin to really consolidate above that $100,000 level for me to have full 100% confidence in the altcoin market and taking more leveraged trades. For now, I am only really trading with Ethereum and then some other smaller speculative trades that I've shared in my previous videos. Speaking of trading, I'm sure you heard of the platform Pump Fund, where you're able to speculate on meme coins in the crypto market. They actually just got banned in the UK, meaning that all members of the United Kingdom can no longer trade on Pump Fund. It's interesting to see that the UK were first to ban Pump Fund. A lot of people were speculating that it would get banned, especially in the US, after some of the crazy projects were launched. People doing some horrible things just to raise the market cap of their token. But an important piece of news that I need to share with you is to always be careful with what exchanges you use, because that Martini guy, who's an OG in the industry, just revealed that the Margex crypto exchange blew up yesterday. The reason I'm sharing this with you is because I want to make sure that you're being careful with the crypto exchanges that you are currently using. So we can see here that Margex accepts deposits for collateral in any asset, the idea being that you can use any asset to leverage trade. Now, they've been refusing payouts to users for a few days that were using XRP as collateral. This obviously led to users complain about this and talking on X to report their issues. Someone actually lost $280,000 because of this. Then Margex started suspending withdrawals and requesting extra fees just to withdraw your own money from the platform. They're also allegedly stealing money from people's account. We see here that this user saw a $6,000 withdrawal worth of XRP out of his account that he did not authorize. And so I would definitely steer clear of this exchange because these are early signs that the exchange is not up and running as it should be. I know that for some of you, this might bring up some PTSD with the whole FTX debacle, but you just need to be careful which exchanges you trust. That is why on this channel, I am sharing with you both Bybit, which has been around for the longest time. It is one of the most secure and reliable exchanges in the industry. They even have their proof of reserve showing that they have billions upon billions of dollars in their treasury, which is always an excellent sign for an exchange. So if you'd like to sign up to a top exchange like Bybit, I would highly recommend clicking the second link in my description. You'll also be able to get a $500 airdrop bonus. Now, the other exchange that you hear me promote very often is called Weeks. This one is also a very solid exchange. It's a little bit newer, but they do offer better bonuses, yet they are still very, very secure. Now, on my side, we have personally spoken with a lot of the executives at Weeks. They are very reliable, very trustworthy people. And again, they're offering insane bonuses to encourage more and more users to sign up to their platform as they become one of the most secure exchanges in the industry. So with Ethereum ripping higher past $4,000, only $800 away from its previous all-time high, Bitcoin flirting with the 100K level, looking to hopefully hold it as support, and altcoins starting to pick up as Bitcoin dominance is plummeting, it's looking like we're getting ready for an insane 2025. That being said, you should always be ready for large pullbacks in this bull market. I've been in this industry for over 7 years now, and it is not uncommon for Bitcoin in particular to dump 30% before just continuing higher. And of course, that affects the altcoin market. And when we undoubtedly get these dips, you have to view them as opportunities, which is why I always recommend having a little bit of cash on the side ready to buy up those dips. You know the saying, it's better to wish you had bought more than regretting that you bought too much. Remember that when it comes to investing in cryptocurrencies. And as I always say, nothing that I share in this video should be construed as financial advice. Make sure to always do your own research. I personally am just sharing how I view the market with you. If you enjoyed the content, make sure to smash that like button, subscribe, and I'll see you in the next one.